Welcome to the Professional Insight Podcast, episode 31, season 2. Yep. Thanks very much for tuning in. My name is Brandon Curry.
I'm Jeff Collins.
Josh Bond.
And Trevor Lindy.
Thanks very much to our sponsor, Brand Boulevard.
Sinking
and you also get a Sierra Smith Financial pen, Joe Gonzalez, who's our No, I got one in the car. Wrapped. Special guest Joe Gonzalez is here for 3 episodes.
Part 3.
This is the 3rd episode.
Nice.
We're going to discuss...
Wrap it up.
We're going to discuss the potential of realtors incorporating. So it is, when we're recording this, it's January 7th, 2020. Mm-hmm. So just so everyone's aware that when you're listening to this on when we're recording, we know that that the bill, it's Bill 145.
How many readings has it had?
It's on its 3rd reading, so it'll hit its 3rd reading sometime this month, if not in February. And then once it hits 3rd reading, it then goes to a vote. It will pass because of the government that's in power, and then it'll hit royal assent. So once
hard-hitting professional insight.
It's gonna pass, he says.
No, they have a majority government, so it'll pass.
Okay.
So once that happens,
with 99% certainty.
Yeah, 99, unless it dies on the floor, which I just don't think it. There's another 2 years.
Somebody might post what's it called there, where they stand in and.
Oh yeah, pirogue and all that kind of stuff. No,
pierogies.
But basically, you will be called realtors will be called professional real estate corporations, otherwise abbreviated as PRECs. Legit, it's actually called PREC.
Right. He just wanted to get that out.
In the bill. It's actually said that. What we don't know, and Bondo
or
PRECs. What we don't know is what realtors. So. We know that under a brokerage,
right? Realtor.
Under a brokerage like Royal LePage or Happenings Realty,
there it is.
A realtor like Colton will be able to incorporate and basically be under a brokerage. What we don't know is, can you have a holding company off of that? Hold that. We don't know that yet.
What would that entail? What do you mean holding company?
So basically a holding company would be a company that you would have off and directly own ownership of the corporation, a holdco. So basically I'll use an example.
A holdco is a lot of times invests in passive.
Yes.
Like real estate and things like that, so buildings and things like that, and then an operating company is more day-to-day active corporation.
So we have them for our build company.
Yeah. So for example, but what we know is that doctors cannot, and doctors and lawyers both cannot have holding companies own their professional corporations. They can have a holding company on the side, but they can't have a holding company own their professional corps.
Okay.
And there's legislation for lawyers and doctors that only doctors and lawyers, licensed practitioners, can only be the shareholders of their said professional corporations. Whereas,
I wasn't aware of that. You couldn't have a holdco as long
doctors
as
cannot.
Yes, I wasn't aware of that.
Okay, hold on. Lawyers can't.
You have to be a licensed member,
yes,
in order to
own part of a law firm.
Correct.
There's no way around that.
No way. Like a professional professional corporation.
So for example,
you have to be. I can't put my wife on my company.
Right. So let's just use. Let's use an actual example. So to put it into layman's terms, right?
Sure.
So Bridge and Quarry.
I like how you looked right at me when you said layman's terms.
He's the one always asking for it, right?
Bridge and Quarry, right? So Bridge and Quarry,
excellent company,
operating company,
really good company,
and then you have a holding company off of each that holds the shares of the operating company. Yeah. Because they're just regular operating businesses. They're not technically classified as a professional corporation.
Right.
Doctors, lawyers, dentists.
Right.
Jeff can put his wife on as a shareholder of that operating company or on that holding company. Mm-hmm. Lawyers and doctors cannot do that. Okay. Right. So there's that piece. What we don't know. That's the piece of the legislation we don't know. We also don't know. In 2017, and I alluded to that.
I don't. Just to clarify, I'm not certain that applies to.
We don't know
to doctors as well, but I know for sure.
No, I know for a fact that doctors cannot have a holding company.
Lawyer disclaimer very often happens.
Yeah, that's fair. But what we don't know also is that in 2017, the Better Real Estate Act, or whatever it was called, allowed realtors to become brokers and sub-brokerages under major brands.
Right.
And incorporate.
Right.
So that was in 2017. We don't know that if, let's say, Jeff Collins, as an example, were to become a broker under Royal LePage, and it becomes Jeff Collins sub-brokerage, whatever.
Yeah.
Can then Jeff Collins also become a prick underneath his own sub-brokerage, so a PREC? We don't know that.
You'd
We
be
don't-
inclined to think that he would
You
be
would
able
think
to.
so. You would think that would be allowed because it'd be a brokerage owning a sub-brokerage, owning a professional real estate corporation, then Jeff Collins being the employee.
As
of
long as you're
professional real
only
estate.
taking one tax benefit from it, I'm guessing, right?
No, there'd be multiple tax benefits.
Because
to
you
it.
can that's the whole purpose of setting up an opco and a holdco,
Right.
right? Because depending on your different taxation, right, then you can.
But there's other benefits to that too,
Yeah.
then, right?
Yeah.
That's a offshoot benefit that saves
Major.
the money.
Well,
a
so
bit,
let's
right?
put it into perspective. So if you earn over $220,000 a year in the province of Ontario, if anyone is listening to us outside of the province of Ontario, please.
You're talking net or gross.
We're talking gross. Marginal tax rate, the next dollar that you earn. Please remember that we're speaking because we're in, due to legislation,
rates.
we are in Ontario, so we're speaking on behalf of Ontario. So we know that it's 54%. They're about 53.74%.
Highest blended marginal.
Is the highest blended marginal tax rate in the province of Ontario. So if you own, so for every dollar above that, you know that as an individual realtor, you're losing,
What a hard time.
for easy math, 54% just to taxes.
Yeah.
Forget about expenses, just taxes.
So you make $1,
Give them more.
54 cents is gone.
54 cents is gone if you make gross over
Once you get to
220.
that.
That's before
Now,
paying
that's
the
now-
brokerage.
So all those people from states considering moving.
Well, keep in mind though that there's also that's taxable income, right? And there's ways to reduce your taxable income through expenses and operating expenses and what have you.
Spend some money.
Now to
Or you
contrast,
pay
No expenses
corporate
for
tax rate.
realtor
Right.
at all. So.
to contrast that, there's the corporate tax rate, and in the province of Ontario, the federal and provincial combined corporate tax rate is 12.5%, up to $500,000, and then $500,001 above that is 26%. So it is a significant savings.
Yeah.
If you're a high producing real estate.
Well, if you don't need to eat everything you kill, so to speak, right? So if you can park some money away in your corporation after only having paid the 12%,
and listen to a financial planner and sock it away.
then you're deferring the taxes on it, essentially, is what you're doing, and maybe
Right.
not ever paying it. Depending on
Well,
how
there's a
you
lot
treat
of
it,
and there's a lot of different things that you can use. Like you can then use insurance and different things as investment vehicles, not as for insurance purposes.
But it also protects your name too, right? If you
100%.
go through
Liability.
lawsuits
well,
and
there's
liabilities,
the corporate
right?
veil, right? So
That's
basically,
the big thing for you too, because you can get your ass sued.
Look, there's two. Listen, you're going to incorporate for one of two reasons at any point in time. You go see a lawyer. Lawyer's going to tell you 10 times out of 10 incorporate because it creates that barrier. Right. So from a liability perspective, it's always beneficial to incorporate because you're creating a separate and distinct entity that has the ability to sue, be sued, right? And it doesn't. There's certain circumstances where you pierce the corporate veil, which means
negligence and whatever.
liability flows through the corporation and attaches to usually a director or a shareholder. Very limited, right? A lot of times for your source deductions and things like that, government remittances. The second part is from a tax planning perspective.
Yeah.
And that's more so
There's protection and perks, basically, right?
Correct.
Yeah,
correct.
the financial planning perspective that we
So
touch on.
if you're saying this is happening,
It's happening.
there's going to be a lineup of agents who should be wanting to do this, right?
Not necessarily.
Your
So
top
basic-
performing
Your
agents.
top performing agents
So
should
let's say
definitely
top
because this
10%
allows.
basically?
So in the last
That's different than what you were saying, though.
Top
right?
5 then?
Right? Yeah.
in
your
the
top
last
5.
in the last episode we touched on, hey Joe, why did you become a broker? There's a bunch of different reasons why you became a broker. But then now a lot of the reasons why people became a sub broker before, which still made them, they had to do the courses. They had to get the trusts. They're still subject to RICO and compliance. This PREC ability, allowing Jeff Collins just to incorporate as a professional, allows you to get the tax benefits and financial planning benefits, but without taking on the risks and the compliances of being a broker. So it services two of the major things through financial, estate, and tax planning, but also allows you to like that barrier, so that from a lawsuit
And
perspective.
Tim Hudak's been fighting for this for a while now, right? And he's kind of
A few years.
Yeah, so I mean,
So
like
it's been a bias against real estate agents for a long time.
long
really,
time.
for no
Oh,
reason
listen,
whatsoever.
like your education board is ORIA, right? The ORIA.
Yeah.
I mean, we're pronouncing all of our vowels wrong in
Yeah,
these
whatever.
episodes.
Yeah.
Listen,
Is it rough?
it is no. Listen. I'll go on. Listen, I'm
hard
not saying,
hitting.
I'm
here.
not saying he is the reason, but the next time this gets through this year, the next time you see Tim Hudak, you better shake his hand, because
Buy
I'm
him
telling
a
you,
beer and adult cannabis. stick.
he is.
We're ready for him.
Yeah.
He is the president of ORIA.
Yeah.
And I mean, he definitely has some sway and some influence. He's a
So I think
former-
that's a
been
good
around.
example
Oh, for
here.
sure.
We did because Trevor, you incorporated what, a couple years ago or last year?
Yeah, beginning of 20. What year? Was it beginning of 2018 or beginning of 2019?
And you decided to wait till your income was at a certain level, and then you thought it was worth doing, right?
It was the conversation with the accountant,
Okay.
right? So that was where it.
and your financial
came from.
planner.
So Jeff,
Well, it
essentially,
started
if
with
you-
the accountant.
So we can start the paperwork
If
now
you-
for me if you want. I don't care. I'll do it.
But I mean, it's
Can't do it until it's
it
passed, though,
doesn't
right?
take tons and tons of time to incorporate.
No.
If
I've done
say
it.
you make 100
Just tons
grand,
of fees.
We got to do it on a Saturday, Sunday, though.
okay, Boxing Day, or
No.
It bills
Say
every
you need
3 minutes.
say you make 100 grand,
Yeah.
but you really only need 50 grand to service your debt.
Mm-hmm.
Okay.
I wish.
No, but just in
Right,
this example,
right.
right?
Yeah. Yeah.
Jill's working and she's making 200K, and you know what I mean.
Nice.
But there's any kind of circumstance that can put you in that position, or whatever that number is.
Mm-hmm.
Wherever you have that measure of income that you don't necessarily need to draw on it,
Yeah.
and pay the
I can leave that in the hold co then.
and pay the 12% tax rate.
And
What's
just build that
Leave
up
it in
and
an opco.
leave it in the opco,
Yeah,
or should I
well,
move
you
it to
would
the hold
be-
co
you
if I
can
could?
you can move it. You can leave it in either.
It
Yeah.
sits in the opco before you move it,
Okay.
right? So,
But don't get caught up on the opco holdco. You can in your professional
Oh, I feel like
corporation.
I'm collecting corpse. I've got like 4 of them.
you don't
So-
want it. I mean,
I had an opco, a hold co, another hold co.
Yeah, so basically, what
Need
you
another
want,
opco.
what you want to do is you want to basically do,
Yeah, you
do
would
it
have
do it from a
Yeah,
from a
before.
planning a financial planning perspective that allows you to
Right.
Investment property.
keep
would be
money
with the
in.
opco
Are you
pocket.
even listening? Like, I mean, my God, you of all
yeah.
people need to listen. You keep going on about four.
I'm talking to my lawyer here.
I know. I'm trying to. But anyway, you gotta structure it in a way.
Yep.
I mean, and make sure that it's done methodically and that with reason and purpose behind it. Because one holdco can own many opcos, and it can be all centralized, and you can
Absolutely.
flow dividends up through, and then use a family trust off of that. And there's a lot of really cool and funky ways that you can actually do it. But it's not for everybody because let's be honest, you have to file another tax return because in the eyes of CRA, a corporation is a separate entity. It's another person.
And that's a lot more expensive tax return too.
Can do. And then on top of that, you
Yeah.
also need a corporate will, which is a second,
And
you know,
a
is-
buy-sell agreement too if you got a partner.
yeah, buy sell is very strongly recommended.
Yeah.
So
Yeah. Yeah.
Lots of money going out when you do this stuff.
Well,
But
that's
it
the
saves
thing.
you quite a bit though. So
that's
in the grand scheme of
that's
things,
the thing, Jeff. Right? That's why it has to be from a financial perspective.
Mm-hmm.
A lot of people, well, from a liability, okay. You know what I mean?
I think the liability is a huge portion of it.
I
though.
agree.
I agree.
I
but
agree,
Not everyone's like, oh yeah.
Let me just touch on liability as realtor. Right? That's what you're saying?
Yes.
So we have errors and omissions.
Yep.
Yep.
So if we incorporate what extra protection? I understand.
So the errors and omissions would go with the PREC.
Right.
Right. So the PREC would take out the E&O and would actually pay the premium and be the benefactor of the E&O in case, God forbid, there is ever, because if anyone were to sue,
Yeah.
all transactions are done through the PREC.
Right.
And so the lawsuit would hit the PREC and the brokerage. It wouldn't hit the actual individual employee.
So wouldn't sue your house.
a
would be
corporate
safe.
veil,
No,
essentially,
no,
right?
I,
You're fully
I understand that. I just trying to see what the extra protection is.
on top of errors of emission.
Yeah,
you're
on
asking,
top
right?
of errors. and
So
omissions.
the errors and emissions would still exist.
Yeah.
Okay, but it's who they sell.
No.
Yeah.
Yeah.
So
Essentially, if you've got a sound errors and omission policy where you're not really,
I have no idea. I hope it is.
but
Yeah,
just
that's pretty good.
but based on your
Deductible of $2
your
grand we
your,
got.
your, value, your
25, yeah.
values,
Yeah,
right?
yeah.
In
Yeah.
terms of your coverage and stuff like that.
Right.
So if you've got coverage for $1 million and you're selling $3-4 million commercial
Yeah.
places, or you know what I mean, then you
Right.
don't have a good.
Right.
But I mean that's why we as professionals have E&O insurance, because
Right.
from PREC or prick perspective,
Right.
the stronger advantage there is going to be your tax.
Yeah.
Your
Yeah,
your
yeah.
tax structure, right? Your financial planning.
yeah, that's the biggest. That's the biggest benefit. That's the biggest benefit.
Yeah, we like that. We like it.
Well, anything to
Well,
protect
it's-
I think
me, right?
it's great. I did it for 10 years with my PC, right?
You did what for 10 years?
I operated under a PC for 10 years.
Professional corporation.
Yeah,
And
professional
you're not
corporation.
doing it now?
I am not doing it now because the firm that I'm at just
Won't allow it?
doesn't have it. Doesn't have that structure. Doesn't allow for it. So I'm an employee now essentially.
That protects you a little bit there too, though, right? If you're an employee, even
Yeah,
though
I
they
mean,
can
it-
terminate you, but
Yeah, there's different.
it's under that company really that lawsuits would come against, right?
Not as professional.
No?
No, the professional liability attached to you. But again, you've got E&O.
Law firms have different structures. Hey, I've
Yeah.
been learning a little bit about it.
Law
Oh,
terms,
yeah.
law firms,
Limited
accounting
liability
firms, yeah.
partners.
Yeah.
They're quite similar to realtors,
Yeah,
really,
yeah,
when you
similar-
start to break it down. And I didn't know that. Same with doctors too. They have separate billings and all that.
Yeah.
That was interesting, having a doctor as a client and figuring that out.
Yeah.
Like those are fun.
So be on the lookout for that by the end of 2020. And
So you
if
think
you do
the
not,
end of 2020 is
oh
when
yeah,
we got it?
100, yeah.
But
if
not
they're-
not mid 2020. So
Well, you never know. I mean, like I've had a bill go third reading before, and
once the third reading happens, how long until it's implemented?
so implemented is royal assent, and
Okay.
typically that's a couple months after.
Oh, this guy knows his stuff, eh?
Oh yeah.
So, like for example,
But after
there-
third reading, doesn't it have to go to the?
after third reading, it then
go-
goes to a vote,
Yeah,
and then
it goes to a vote in where?
into Queen's Park.
Okay, but there's two systems, right?
No,
Am
no,
I
no, no,
thinking
the-
American.
No. So you're thinking federal. So federal, there's
Okay, yes.
federal. There's the House of Commons and the
Okay,
Senate.
That's what I was thinking.
But no, every province abolished
yeah,
their Senate,
yeah,
so
yeah,
that's
yeah.
we don't have a Senate anymore. So basically, it goes from our house to royal assent to
So it's
our
a month for that, and then probably
couple months, yeah.
and then so we're talking 6 months probably from the next thing.
If everything goes according to plan and there's no
So
delay, and
fall maybe, or
I'd say fall. It's pretty good.
You may see it as early as midsummer.
Yeah.
Early fall.
yeah.
I'd say that's on the
So
early
then they-
side, but
I would call you and say,
Yes.
let's do this.
Yeah. So you
And
would
then you
basically
tell him what I got to do.
So you call me,
Yeah.
and then I work hand in hand with your accountant because I come up with the financial plan, and your accountant and I work hand in hand together and going, yep, okay, this is the structure that we've come up with because this is the financial plan and where this person wants to go and why they want to do what they want to do. Your accountant will agree or disagree, depending, and we'll have that fluid conversation, and then your chartered accountant sends the instructions to the lawyer.
So then my license is in my name would have to be reissued in my.
not sure yet.
We're not sure yet. Those are the little
parameters aren't,
the finite details. We're not too sure yet, but those get those get worked out fairly quickly
That'd be interesting because then
Essentially,
you got to
Jeff,
put the
you
confirmation
would be an
cooperation.
employee
of your own
of your
corporation.
prep,
Yeah.
right?
So
And-
Royal LePage would pay all commissions that you do to your PREC, and then you, as the sole director and owner of your PREC, would then issue either dividends or a salary to
Look at you guys.
To-
You guys know. I
to
like
your
it.
to yourself as an individual.
And you got to
this
but
is-
you
You
got to
guys aren't
charge
just good-looking
HST.
guys in this room, eh?
You got to charge HST on your your
commissions.
commission and your relationship with
Yeah.
Royal.
So it'd be the
LePage.
same thing because
But then
I
you-
collect my own HST anyways.
Do
and
you
I
remit
res-
it?
Yeah, I remit it.
So it'd be the
Yeah.
same.
Yeah,
process.
real
It's
estate
the same,
agents have
nothing
to
will
remit.
change.
So it's
Yeah.
just my
We
name
don't.
changes.
Like in my
how we
side
do
of
that, my
things,
license
Yeah,
basically.
Mortgage
you
world,
could
no.
then like
You're gonna
sit there
do
and
it
go,
There is
for
a
sure.
Jeff
just
Collins,
dictate certain-
Jeff Collins
for
Inc.
certain
Yeah.
things.
Jeff Collins
But it doesn't break the threshold.
Incorporated.
But it
Jeff
doesn't
Collins
come to me.
prick.
Prick.
It doesn't come
Yeah,
to me.
Jeff
It's
Collins
just handled
prick.
You
through
already
the
are
brokerage.
one, but
Jeff Prick.
you'll be literally and figuratively one now.
But I think it's different because you can use your own name as a corporation as opposed to calling it like
I think you
the Collinsinator.
in our case,
He's been thinking about this over
Yeah.
video games on the Christmas break, the Collinsinator.
Zelda. I've been rocking Zelda on Nintendo.
I think you have to have your name.
Yes, you will for a
Or-
professional corp.
You know
Jeff
what I mean?
Collins
Yeah.
Limited or whatever like that.
But I think
Yeah.
you also have to have the word professional corporation.
Yes, after it.
In
Sure.
the title.
That
Collins Press.
They-
all
they get-
these
they get-
details will be sorted
Yes.
out, but yeah,
Yeah.
you're going to be treated more like a lawyer, an accountant.
But you think the top 5%, that's what it appeals to, really?
Oh, yeah.
Predominantly,
Yeah.
yes.
Listen, if you make over
200?
if you make over $100,000 a year,
Mm-hmm.
you should seriously be sitting down with your financial planner and your chartered accountant to see if this is right for you.
Mm-hmm.
Over 100 grand a year.
Yeah, 100,
Yeah.
and a half.
Yeah, because you're now
Thinking-
into that
thinking about it.
43% tax bracket. You know, where that's your gross, but do you have enough income to write it down?
Yeah.
Do you have enough expenses? And the minute you put this money through a corporation, the expenses become more legitimized
Yeah.
as opposed to from an individual, right?
Yeah.
Because the corporation can issue any expenses that they want, and they're just taxable benefits. Whereas before, as an individual, you open yourself up to more
Investigations. from the
investigations,
CRA, really?
audits. Yeah, like
right?
it just becomes.
You've filed already as a corporation, personal corporation too, right?
I know, I haven't.
Oh, so you're doing that for the first time.
Yeah.
When's your year end?
The year end, 31st.
calendar year.
Okay.
Yeah,
Yeah,
I
so
did
it's-
my calendar year.
Okay.
All right.
Interesting. So there's going to be
Yeah, it's gonna
lots of
be.
business
Yeah,
for you
so-
guys coming
well-
up potentially.
Stay tuned.
Yeah,
right?
good.
Well,
Really, yeah.
and
Good.
just something to note on that when it comes to borrowing, it'll be really interesting to see what happens mortgage related
Oh,
because
yeah.
like the whole stated income programs were
Oh,
taken
yeah.
away from people that earn commissions.
Commissions, yeah.
So we weren't allowed to do ad backs and things like that. We weren't basically allowed to throw a dart at a dartboard and say, okay, this is the income that you have to use. But also, right? But lenders have gotten away from dividend income as well. Like even using dividend income, which makes the most sense from
But
corporate
everybody's bitching
standpoint.
about mortgages and stuff right now. So you think 2020 something's got to come back? They got to give back a bit, either longer amortization,
Nope.
smaller stress test.
I think the only thing we're going to see is possibly stress test
Because that's been
change.
attacked a lot in the media right now.
Well, recently there was an article, Rob McClister, is that who it is? One of the websites, rate websites or whatever, writes for Globe and Mail and a couple of other places, and he was saying, what was his comment? He commented that the banks are the ones that drive the benchmark rate, which really doesn't make a hell of a lot of sense because it's literally just a random number, right? 514 right now. It would make more sense to actually have, in his article, he said, why not take the 5-year bond yield plus 300%, right? So now you've got 300 basis points getting added to it. The qualifying rate then becomes, say, 4, right? If the bond yield is sitting at 1%, you're adding 300 basis points to it. 4% to qualify on the stress test.
Yep.
And
Yeah, well,
part of the
that's-
reason, like his logic behind it is, look where our interest rates are right
Giving
now.
back to the buyers this year.
Right?
Something's gotta-
Look where the interest rates are. And at the end of 2019, we had Trudeau send a letter to Morneau
Yeah.
saying we need to reevaluate the stress test.
He said that, and he has to lower the cell phone bills.
Because
That's the
because
big other argument.
we'll end on this because I
doubt.
said it has negative impacts on the vacancy rates because people can't get mortgages.
Just
Yeah, true.
Well,
I said
they
that.
also
This
need
is-
to start tackling the supply side of things. They with the stress test, they went after the demand. They're not doing anything to help
With
the
the
supply,
supply.
though,
No,
right?
But see, for the first time, I can't remember the article that I'd read, but these was it Gen Ys or what's the new generation?
Millennials?
Millennials that start to buy houses now.
Yep.
They're really not even considering home ownership as a viable option
no.
That's
For the
why you
first
have
time.
lenders like
for the first time in
like
who
Meridian
knows
that
how
came
long.
up
Yeah,
with
eh?
the friends and family mortgage.
Yeah.
It's really just a way that non-related parties can buy a house, and every lender's already done it. Two friends say, "Hey, I can't afford to buy a house on my own. Neither can you. Why don't we?"
split on it.
Yeah.
Sell later on. We got some equity.
Yeah, pool our money together, right? You got 25K, I got 25K. Let's put that. We got 50 down. Let's buy something now, right?
We
And
should
what
hit
you
on
s-
this next time, I guess, because we're.
Yeah.
Yeah, and what you're seeing though a lot is you're seeing parents go on
Yeah.
right?
Oh, yeah,
And then
yeah,
you're
yeah,
entering
that's
into
common.
trust agreements with them saying that, well, it's really the kid's house.
Yeah.
Yeah.
It's not the parents,
Just so
that they don't
everyone knows, the mortgage talk was by Trevor Lindy because he didn't talk the last couple episodes. So I just want to
I
reintroduce who
did
he
just
was.
fine
So
talking.
that was Trevor.
It's different when Jack
Dominion
not
Land.
around.
All right, let's wrap this up.
All right, thanks very much.
Yeah, Joe,
for
thanks for all your
listening.
insight,
Thanks, Joe.
buddy.
Thanks for
Appreciate
coming.
it.
Yeah, thanks for
Brand
having me on.
Boulevard
Help
for our-
us
Hat trick.
help you stay informed.